Wayne Blau with another QuickBooks tips. Um, One of the things I find, is that very few business owners actually understand the power of what QuickBooks reporting system will do. I mean, basically, if you put the information in, you can figure out a way to get it out. But let's start with some of the basics. Basic is the income statement, and the income statement, and QuickBooks calls it the profit and loss. Either way, they basically mean the same thing. It's my experience that most business owners just don't even bother to look at it. I mean, the ones that do, I mean, they most business owners just simply want to be, learning, selling a product, producing the product. That accounting is the last thing they had in mind when they started their business. Um, so as soon as they start talking about it, I mean, most of those type of business owners will look at this article and won't even open the video. And sadly, that's a problem because the profit and loss just has a gold mine of information in it. One of the problems is, and I've opened my standard, in this particular case, this is one of the sample companies you can see right here. It's a sample rock castle construction company, my old favorite. So let's go. You can see it up here when you get to the reports. You click on reports, you go to companies and financials, and it opens up a few different ones. Let's open the profit and loss standard. This part of the problem is their standard one really doesn't have a lot of use. I mean, it's financial statements. Good financial statements should really ask questions, not necessarily answer questions. And this one here, I mean, it's just a bunch of numbers. By themselves, they don't mean much. I got some sales, I got some cost of sales, I got some sales up here, I got some income, I got some cost of goods sold here, and a bunch of expenses here. I get down to what's called net ordinary income, and then I add other things, other income, and I get to the bottom line, which, if I'm lucky, normal business owner starts up here, sees what their sales are right up here, and then flips quickly down to the bottom line and says, "Did I get to keep any of it?" And then they complain. But that's just part of the story. Let's start to make this thing make a little bit more sense. Let's go up here to where modify report is. See it up here, and let's add some simple things. Let's add percentage of income. You can see a percentage of income. Now I'm starting to get, okay, my cost of goods sold is 32% of my income. Is that good or bad? Well, who knows? I mean, the best thing you can do is kind of keep a running record of what your percentage of sales is, so you can see, comparing this month versus prior months, how well that worked. And let's kind of take a look at that. Let's go back up to modify report, and let's change right here, instead of totals only, change it to month, and we'll say okay. Well, that wasn't very useful. Let me try. Oh, yeah. Duh. Let's also change this to this fiscal year to date. All right. There we go. Now notice, let's collapse this so I can see it all on one page. And now notice what I got. Obviously, it's a sample company, so it's in the future. I have January, February, March. You can see the income goes across, but I can see my cost of goods sold, my job expenses, goes from 34%, 22, 24, 14. Now if I go across and put my December at 38, and my average for the year is 40%, so I'm kind of in the ballpark. Now what I could do is go look at this month. Why was this job? Why were these 2 months, October and November? Why were my job expenses at 63 and 54%? I might want to review that and see what's going on. Did I why were my percentages so high? I mean, there's a certain type of job or a certain type of thing I'm selling that I just don't make as much money on. Product mix has a big effect on bottom line. Um, but you can afford to have more if your sales were higher too. You look at both these months are in the 60,000, so my cost of goods sold was higher, but I actually ended up making about the same, at the bottom line when I was done. This is one of my favorite ways to look at a financial statement, is looking at it by month. I can also accomplish this similar thing, and we'll do it in a minute, by looking at prior year. Yeah, I'm going to look at my sales, look and see, up here. Come on, let's look at the bottom line. Had my finger on the wrong button, couldn't get the darn thing to pop. We're looking at the top line actually, and we're seeing sales. And you might want to keep a running total, use an Excel spreadsheet, or you can expand this out for multiple years and just kind of see, is that normal for January, February, March? They're kind of low. April starts the construction company, so you kind of expect it to pick up in the winter months, but in the summer months, I mean, but this doesn't seem to. So, we're going to look at that. You got job expenses. Another way to look at it is to go down here and see payroll expenses run about 30 some odd percent. 37, 37, 37. Oops, here's one, 45. Interesting. 45%. And I think probably the biggest reason the payroll really has stayed about the same, around $9,000. Just our income was so low. So that kind of tells me some things. Probably when income is down, I need to try to cut some of my cut hours or something. Need to get control of this. There's not really much of anything here to look at. The insurance, I can look at, look for things that happen odd. I'm looking across. Auto expenses were a little bit higher. Uh, Kind of, they run 80, and I got a couple of months here. What's kind of cool, see how when I see my mouse, when I go over a number, it turns into a Z, which means I can zoom in. I can zoom in and see what's going on. And here was an insurance bill. I can zoom even more and get straight to the item. And this explains why it was a little bit higher. It's a quarterly insurance premium. So this is one way where I can see what's going on and get a feel for the whole thing. Let's close this down, and let's close some of these down, and let's get back to the P&L. Another way to look at the P&L is to compare it. Remember, I told you by itself doesn't really mean a heck of a lot. But if I if I use it in comparison to something else, like there I compared month to month, well, another favorite way is to compare it to a previous year. And in this particular case, you can see I got January, I got the current year, which is 2014, and the prior year, which is 2013. Remember, it's a sample company, so we're living in the future here. And I can see, had a huge increase, 171% increase in sales. You see it right there. And what's nice, had a only 157% increase in cost of goods sold. So I can look here, see job materials, permits, license. I'm looking down, see if, I'm looking for big variances, things that have changed dramatically from one time period to another. And really don't see a heck of a lot. I mean, obviously some things have changed. Workers' comp has gone up, but with income being three times more, uh, roughly, it's not unusual to see that increase. Uh, I can see that interest expense is lower, so I probably paid down some loans, is what I would expect to see. Wages are the same, so I guess everybody's on this is probably the owner's salary, more likely than not, so it's probably not something I can do anything about. You can see right here what I've done is I've looked and seen what I can control. There's another interesting format that I like that a lot of people don't realize is there, and it's this one right here, which is called profit and loss detail. Now, what a profit and loss detail does, it's a great review tool. It allows the owner to kind of look through and see what's in every category. Like, here's all my design income, and you might look at it and say, "Oh, wait a minute, that wasn't design income." The business owner can click on it, and oh yeah, well, I guess this time it was a design income. You can do something like that where you just might not remember something, and you can go back. Remember, the beauty of this is I can go back into the past. Ourselves, we have our accounting records back to like 1992, 93, whatever the first QuickBooks version was. So I can really compare what a customer's done with me a long time. Remember, not all customers are created equal. If a customer's been with you a long time and shown loyalty, then you're more willing to cut them some slack and help them out when they run into trouble. Materials income, you can see what I'm doing is I can literally see every check or every invoice that's in a particular category. So right now I'm in job expenses. So I get the bills, equipment rental. I can see who we're renting it from, job materials. Little problem when I'm using jobs. The name here is actually the job. If I want to see who I paid, I need to go up to modify report, and in this area here, I need to actually go to and find something called source name. You see it right there, and add it to my report. Now, let's just get rid of some of the unnecessary stuff so I can kind of show you what I mean. Let's just get it to fit. If you look at the source name is telling me, let's go down to the expenses, who I actually paid. See, I didn't pay here in the permits and licenses. I didn't pay, Ernesto Notiello. I would pick a name I don't know. Let's go down to Ecker Designs. I did some. That's an office repair. That's telling me the name of the job. Here is who I paid. The city of Bayshore. By adding the source name, I can actually see who I paid. Under subcontractors, I can see all my different subcontractors here. See, I mean, actually CU Electric, which is for the job. So this is a pretty good way to look and review what you've done. There's many, many more ways to do it, but those are the main things. If you spend some quality time with your financial statement, and remember to look at it by the month, by the quarter. That's another thing I didn't really show you. Let's take a quick peek. Another one of my favorites is to take the profit and loss, and I can take a 2-year time period. I can come in here and let's say I can do all and then do it by quarter. Let's see how much is in here. Yeah, it's going to go, I guess they did a couple of years, but you can see I can see it by quarter and kind of review a little higher period and see how things have changed. So I can see, that quarter, income was doing pretty cool, and I had a jump in March of 2014, June, September, December. What I'm basically seeing is a company that's starting to take off. And, this is a good story to tell your banker, and it's a good story for yourself. As the company grows, another thing is, we're in December, doing this in early November, late November, I'm sorry. By the time you read this, probably early December. You're going to see a time frame where you see that kind of income increase. You better call your accountant and do some tax planning. So that's something that can actually help you too. Anyways, I hope that helps you learn how to use your income statement as a way to increase profits by looking for trends, by looking for things that you need to control, expenses you need to control, and to look for types of sales that have taken off. Until next time, let's make this our most profitable year ever.